Hi, good morning, everyone. Today is August 27th, Tuesday. So you can see the only trade I took, let me hide these too many windows. The only trade I took is PDD today. This is a continuation from yesterday when this thing gapped down. You can see huge gap down overnight. This is a daily chart. PDD, prior day's close was over at 140. Opened at 110 yesterday because of earnings miss and guidance cut. And you can see this thing faded from 110 all the way down to 100. And lower day was $96. So that's the chart from yesterday. You can see I posted the chart. I also traded this thing yesterday as well. So I traded the exact same setup, same ticker the last 2 days. Trend joint short setup. Yesterday, I was waiting for pre-market low broke down, which it did right at the open. And I joined in short, I believe at 106s, added some more on the way down. And my best cover was on $98. SSR was already triggered yesterday. If you want more reference, you can see the charts I posted where did I post it? In short chart, selling charts. Now today, you can see today, I actually was expecting a gap down overnight, but it actually started bouncing after hours, went all the way back to 103s. SSR is still intact, still on. SSR is still on. And then you can see prior day's close is this dotted line. At the open, I waited for a pop to test that 101s, 102s area. I added the short 101s. And once that area rejected really instantly, I added some more near prior day's close, 100s down here. Once it flushed down, went red to green. Because remember, above prior day's close, it went, at the open, it went red to green at the open, and then went green to red. So for this to confirm, you want it to stay red on the day, even if it tested like it popped up above green and test some of the levels. So pretty straightforward trade actually. And then so I covered some 99s and I just held it all the way till 97s. My ultimate target would have been 96, but no, at the time, market was starting to bounce. So I didn't want to risk it bouncing and chopping for like the next 3 hours around 98, 99 until the fade. So that's why I covered all of it. And also I had to step out for a little bit. So yeah, 97 covered it all and that's it. Pretty straightforward trade. It's looking like it's breaking this area, 96s, and I wouldn't be surprised if it continues fading. And that's the beauty of these trend joint setups, whether it's trend joint long or trend joint short, right? If you see a lot of relative strength or relative weakness in the short example, for example, for yesterday, a lot of times they are really great candidates for swing trading short, in this case, for the next 1 or 2 days. For example, in this case, you would have started the swing yesterday, not today. You'll carry this for the next 2-3 days, like a short-term swing. Same as a trend joint long setup. That one, depending on the situation and the catalyst, sometimes you can swing that for a couple of weeks or even months.
These are going to be the trend joining setups that work really well on individual stocks or E-mini futures, because they are based on the intraday trends and volatilities of the markets. If you're a trader who's working on improving your trailing stop management and letting your winners run, this trend join long or short strategy has very useful criteria that you can also apply to your trading setups. To trade a trend, you need to first understand what forms a trend. Duh. I don't always draw any trend lines on my chart, but I'll pay attention to these setup criteria. So let's go over the setup criteria for the trend join long strategies. Number 1, you need to see the market either breaking out or breaking down. You do not want to see a sideways consolidation market. Number 2, you want to see the instrument you're trading to stay above the highs, especially above the pre-market highs after 10 a.m. Number 3, and this is very important actually, I want to see the daily chart of the instrument I'm trading for this setup has a lot of room to the upside. So let's take a look at this chart example here on SPY. The day in question is this one over here. So this one only becomes a trend join long setup after it clears through the recent daily resistance, which is the higher day from the day before at 524's area over here. So for me, I want to see the stock or the individual instrument trade above this key level after 10 o'clock. So you can see the pre-market session, it gapped down, reclaiming over VWAP and the ATMA here, and over that daily resistance we talked about here, 523, 524's area, and started trending along after 10 o'clock over here. So that's how you know it met criteria 1 and 2. And number 3, you want to see the stock or the instrument after it cleared through that recent resistance has more upside to go, right? You want the risk reward to be worth it. And just so happens, because of the recent gap down, that also kind of ironically made the upside a lot greater as well. Because you can see the gap down from last Friday, gap all the way down to 512s for SPY. And this day, you're bouncing back, filling the gap in between. So you can see the upside technically, this thing has upside to 530s on that particular day as well. So that's the irony in this. It's only because the stock has sold off so much in the short term the last couple of days. Now the particular bounce potential to the upside is so much greater. Hopefully that makes sense. If you have any questions, you can let me know down below. I'll clarify. But yeah, that's why volatility is so great and all the traders should embrace it. Again, we're not investors. Sure, investors will panic and worry about their long-term Apple investment. But for us traders, all the upside or downside sell-off volatility is amazing because we want the range to profit from. So over here is a chart example for trend join long on Apple stock like I took on Tuesday of that week. So you can see after a hold of 203's daily support level, you can see the stock reclaimed over VWAP. I was staying very patient, got long 202's, starter size, added at VWAP test, 204's area, and I rolled it all the way to that previous day's closing price here, around 209's. So some of the key entry confirmations you want to see, holding major key level support on 203, 204's area here, 5 minutes or 15 minutes if you prefer. Stock later reclaim above VWAP. That yellow line here is VWAP. You can see a nice reclaim. All the wicks towards the sell-off got bought back up. So that's a very bullish sign. And eventually, you saw SPY traded above the pre-market highs after 10 o'clock. So that's what also gave me the confidence to keep holding. Instead of selling right here at 205, I rolled it all the way to 209's. I did not do this, but this is an option if you want to use a trailing stop or stop based on different levels. I was more so just watching the stock sitting here, so I didn't really use a trailing stop. But for those who had to step away, trailing stop is not a bad idea. Or you can use just breakdown of any support areas. Some people use VWAP. But I think you will give back a little bit too much because VWAP is all the way down here now at 206's. So the beauty of this trend join long setup is that a lot of times if you have good average and you still see a lot more upside, like we talked about earlier with the daily resistance, you have more room to go. It's worth it to hold some small size or even just a quarter for an overnight swing or the next couple of days. Again, if you want a refresher of the different swing strategies I have, you can check out this video over here. You can continue to learn from the full trading tutorial videos over here. And feel free to check out the Humble Trader community using the link in description if you're interested in learning more trading strategies and trade alongside a team of trading coaches.